My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach. Call me, 1-800-743-CNBC. Tweet at Jim Cramer. I love days like today. And not just because the Dow surged 337 points, S&P jumped 0.91%, NASDAQ pole vaulted 1%. I love this action because it makes sense. I like it because it's rational. This morning, we got a remarkable employment report. Remarkable. We created 266,000 jobs last month, very little inflation. And these phenomenal numbers finally drove a stake through the heart of the idea that there's a recession looming just around the corner. Most of these big picture macroeconomic data points tend to be pretty ephemeral. They matter for a day, then we forget them. But not the Labor Department's nonfarm payroll report. This one tends to linger, painting the whole market in whatever light that report is. And in this case, of course, it's a positive light. These matter. Why? Because we head into next week, it's going to affect all of our game plan. Before we get to earnings stuff, I need to cover two significant events. On Wednesday, the Federal Reserve will reveal its next move when Chairman Jerome Powell holds his interminable press conference free-for-all. After the fabulous numbers we got today, I don't know, I'm worried. I'm worried the guy could turn hawkish again like he did late last year when he took a wrecking ball to the economy and the stock market. I'm calling Powell a wild card. Best outcome? Let's hope he says that even though we've got great job growth, there's not much inflation, which means there's no pressing need to tighten. Ideally, he'll also add that he stands ready to give us more rate cuts if the trade war with China continues to weigh on the industrial side of our economy. That'd be a huge positive. But if he takes a more hawkish tone, well, you know what? Look out below. And he's capable of that because sometimes I think he just can't lose the old model. The other big non-earnings event, well, over the weekend and into Monday and Tuesday, the American Society of Hematology, ASH, holds its annual meeting. Now, get this. This is where a bunch of big pharmaceutical companies could surprise us with strong data. I'm paying close attention to Bristol Myers, which will have a webcast of potentially market-moving data from the conference. Full disclosure, I like this one so much that we own it for my charitable trust. You can follow along all our moves before we make them by joining the ActionAlertsPlus.com club, where I'll be talking about Bristol Myers at my meeting next week. As for the earnings side of the equation, over the past week, company after company with high revenue growth and little to no profits has seen its stock get savaged after the report. Will the pattern continue? I told you this is what I'm worried about, the bear market in high rev, low earning stocks. What do we got? All right, well, we're going to get Chewy, MongoDB, and Stitch Fix. Chewy's an online pet store that's growing like a weed. You probably see the boxes all over the place and when you get UPS guys throwing around. But the rap here is that they're spending too much to keep their customers happy and bring in new ones. And that's not the right model anymore. MongoDB creates database software for large enterprises, extremely well run. Stock's up 56% for the year. But I got to wonder if the company's rapid revenue growth will be enough to impress Wall Street at these levels. As for Stitch Fix, it actually makes money, but doesn't make enough. Stock's up 41% for 2019. And we know the apparel space, fickle. Let's see how they do. On Tuesday, we would get the results from AutoZone, AZO. And while I hate most of the auto industry here, I do love AutoZone. This do-it-yourself auto parts chain has great business, and it tends to buy back mountains of stock. However, its shares often get hit after the quarter because management's so conservative. I recommend buying some beforehand in anticipation of great results, and then buying some after in case the stock gets hit. So remember, if AutoZone goes down, the company will be in there buying back its stock right next to you. Now, we're going to have a sad call on Tuesday after the close, and that's when Ollie's Bargain Outlet reports. Mark Butler, the brilliant co-founder and CEO, passed away suddenly just a few days ago at the age of 61. And while there was a succession plan in place, Ollie's army will surely miss its leader. Now, I got to know Mark through his multiple appearances on our show over the years. All I can say is he was a good man who was obsessed with charity, especially charities that benefit young people. He was chairman of the Cal Ripken Senior Foundation and sponsored children's parks in multiple cities. He's a good man who died too soon. Next up, should you buy a stock that sets a new all-time high just today and is up 88% for the year? When it comes to Lululemon, I think the answer is yes. The company reports on Wednesday, and I think its momentum remains intact. I don't normally do this, but if you're watching tonight, maybe you've just watched the show Options Action are leaded. If you wanted to bet on Lulu, I'd say play it with deep in the money call options because they'll let you capture the upside if the company delivers, but they won't burn you as badly as common stock in the unlikely event that the company misses because you'll be cut off on the downside. Lululemon is the fastest growing apparel company in the land, and while I would rather own Boot Barn, more on that later, I respect everything that Lulu's got going for it right here. Thursday's going to be huge. After the close, we hear from Costco, Oracle, Broadcom, and Adobe. But I think you may not get the fireworks you expect, given the fact, even though these are all high-powered growth stocks. First, for example, Costco is going to talk about tariffs. It may not be that great, but I think they've mitigated them. Remember, the more important thing is membership growth. That's what fuels this stock. Broadcom used to be an incredibly acquisitive semiconductor company, but lately they started making acquisitions software, not some other things, because they didn't want China to block their deals. I'm impressed by how well they're turning around CA. That's the latest major purchase. I also bet that Broadcom announces a Gigunda buyback. Oracle should be okay. But co-CEO Mark Hurd passed away in October, and I don't know what kind of numbers this company can generate without Hurd's hard-charging, ultra-competitive spirit. Few executives could sell like Mark Hurd. I always enjoyed his combative attitude. Reminded me of the old days. I'm sure Oracle will do fine, though, and I'm hoping to find out more about what they intend to do with the cloud. I expect something very meaningful. They already say they're doing a lot. They need to do more. As for Adobe, it just held a big analyst meeting where it laid out a phenomenal forecast. I think the company will follow that up with strong numbers. Finally, on Friday, one that you often see with Michael Neidorff on the show, Centene has an analyst meeting. This is a managed care company that handles government-sponsored health care plans, and its stock has been on fire ever since Senator Elizabeth Warren backed away from her support for single payer. Specifically, she said she'd postpone it until a third year in office. Me, it's not much of a priority. That allowed this whole group to roar, including Centene. But I think Centene's got a lot more room to run, given that it's only up 5% for the year. I recommend buying the stock ahead of that Friday analyst meeting, especially if the Fed does the wrong thing on Wednesday, which I said they might do. And I wouldn't be surprised if management lays out an aggressive target for 2020. Bottom line, when we get an amazing employment report, we can take a break from the on-again, off-again China news. More on that later. And just focus on earnings. And when we focus on earnings, I think we'll like what we get to see. Roger in New York. Roger.
Booyah, Cramer!
Booyah, Roger.
My stock is Ulta Beauty. I didn't have the nerve to buy Ulta before earnings. Now I'm kicking myself. The stock was up $26 on a 12-cent beat today.
Right.
Do I wait for a pullback to get into it?
I don't think it's going to pull back that much. Now, look, remember, they didn't guide up or anything. They just did the number. But the fact is, they're going to go through this downturn in makeup, cosmetics, and come out fine. That's why Mary Dillon was just simply brilliant on that call, and that's why that stock went up that much. It was because of her own personal brilliance and what she's done to be able to stem the tide when everyone else in makeup is doing not so well. So I think you're fine. I think you can still buy it. Stan in Arizona. Stan.
Big market day, booyah.
I like that. What's up?
Hey, quick question for you. Surprise announcement, Cleveland Cliff taking over AK Steel. As an AK Steel stockholder, long-term, is this good for me?
Sorry. Sometimes a certain word speaks loudly. Matthew in Washington, D.C. Matthew.
Booyah, Jim. Thanks for taking the call. Calling about WestRock, ticker symbol WRK. Got in the low mid-30s, great yield, great jobs report today, consumer economy. Do you think to hold, or do you think this thing's going to run?
I think it actually can run. I mean, you know, the big issue with that company, frankly, was that they there's too much capacity in the industry, but we're starting to get a little, the capacity's not coming on as fast. Not my fave. Not my fave, though. Let's go to Cesar in New Jersey. Cesar.
Hey, Jim, what's going on?
Not much doing the show. How about you?
Good. I have a question about pager duty. I saw it went down today pretty significantly. I want to get your thoughts.
I read the call. I think the company's stock was up too much in anticipation. Jen Tejada, she did a good job on the call. I'm not going to tell you that it was one that was great because they actually shaded down what they, let's just say they missed a little. And in this market, obviously, if you're a high growth company whose stock is up a lot, you got to guide up big, and they did not do that. All right, it's finally time to just focus on earnings, people. And I think we're going to like what we see. On Mad tonight, These boots may be for walking, but are they also made for profits? I'm talking with the CEO of Boot Barn. Then what the recent employment figures can mean when it comes to the trade war with China. And price check on aisle 2. Grocery outlet symbol GO has had a big pullback. Could it be time to circle back to that stock? I'm talking with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.